Look, I mean, having started the tapering just a month back, my guess is that they keep to the $10 billion of tapering. I don't think they want to upset the market, and clearly what has happened over the last few days, in light of that, they don't want to upset the market at all. So I would expect the tapering pace to continue at least for the next few months before new data comes in, and before and how that is assessed and that affects. So I really think for the next few months, the pace of tapering will be continued at this $10 billion rate. I think this was a bad January. Typically over the last 2-3 years we've seen the year begin with some good news. This time around we have had pretty bad news. I think there's a whole host of independent, isolated events that took place. All came at the same time. So you started off with Argentina, you had Turkey, you had China, the credit concerns in China creeping up. You had the China fourth quarter GDP number come out, which was slower than the third quarter. And in addition to that, you had some bad earnings coming out of from the US. I think all of them came out in the same week, and I think the collective impact of that was a sell-off in risk assets across the globe, both US equities as well as EM equities and EM bonds. My guess is that it's hard to tell whether this is the bottom or not, but my sense is that this isn't going to last too long. We are probably near or closing out on the bottom, and most likely you are going to see some sort of a recovery taking hold quite soon. Look, China is going to slow down. I mean, that is the writing on the wall. That is policy induced. This has nothing to do with the global recovery. It has nothing to do with what is happening to other economies in the world. The Chinese authorities have a 10-year plan by which they want to bring down growth rate, and they want to rebalance the economy. And the rebalancing requires the phenomenal credit growth that has taken place in China over the last 4-5 years to be brought down. The question is, they have too many balls up in the air. Are they going to manage to keep all the balls afloat while they rebalance, while growth slows down, so that it doesn't fall off the precipice, but it's a nice gradual slowdown in growth? I mean, that's a big concern. But I think that we should all brace for a much slower China growth rate for not just this year, but for the medium term, and to that extent global growth will be affected by it.